The other day I made a video about GNRC, Generac, and I was talking about why I thought that it was a good idea to get in and buy some options on the way up. We had this nice push here with the volume. If you want to check out that video, check it out right here, and I break down exactly why I got into it, what I was looking for, everything. So I made a prediction that I was thinking it was probably going to try to get to 149, 150, around there, right? So the other day we had just yesterday we had that push all the way to, you can see the high right here, the high of 149.97. So we reached the target of that 150 essentially, right? You're never going to be exactly perfect. And here we can see that we actually ended up going over that. So I added to my position. Yesterday I just had one contract. After I finished filming that video, I added one more contract to it, and I was able to make $13.50 on the trade because I had it push all the way up the next day like I had hoped. And I sold one contract up here and then another one around here. So I was able to make $13.50 on that trade, which was great. But now I'm feeling like maybe this is a little overextended. So I figured this is a great time to show you how I look at stocks and try to take advantage. Now, if something is extended over the Bollinger Band, then what I like to do is sell something called a vertical spread. And I'm going to break it down fully for you right now so that you understand by the end of the video how I look at this and how I actually do it. So when a stock's extended out beyond the Bollinger Band, then 95% of the time, actually, it's a statistic, 95% of the time, it wants to work its way back in. So here it's extended, it comes back in. It's extended here, it comes back in, right? If it's extended here, then it comes back in. So we can see even down here on the low, it wants to come back in. So the Bollinger Band is showing you two standard deviations. When a stock gets beyond that, it wants to come back in. Now, how can we take advantage of that? We can sell calls up above the price here because we believe that it came out over beyond the Bollinger Band and it might want to chill out now. It's either going to go sideways, it's going to crash all the way down here, or it's just going to do a nice little soft run down here. Either way, even if it comes up a little bit, we can still make money. And I'm going to show you exactly how to do that. So what I want to do is in Thinkorswim, I want to come over to trade. And if you use Thinkorswim and stuff like that, and you're kind of, want to learn a little bit more about it, check out this video here because I just made a great tutorial on Thinkorswim, and you can kind of see exactly how to use it, and I break it all down. So we're now looking at the option chain. So in an option chain, you have the days 30 June, July 7th, and these are when all of these specific option contracts are going to expire. So you can kind of go out just till 8 days from now and 15 days from now. So a lot of times when you're selling options, you're taking advantage of something called theta decay, which is essentially just time. You want to take advantage of time. And if you've ever bought options before, then you probably realize that these options start to lose their value very quickly. And even if you're in a stock that starts to go up over where you want it to, and you're thinking, oh, wow, this is great, and you're still losing money somehow, it's because as time ticks away, those option contracts lose value. And so as a seller of options, I want to take advantage of that. So let's just go out to the 43-day because that's probably the better angle to take when you're taking advantage of theta decay. But I also like doing like 2 weeks, but let's just look at 43 days out. So what I like to do is come down to the delta. And so I want to look at delta, and I like around 30 delta. So real simple, just for delta, a simple part of it is it's essentially saying at 32, that's meaning they're saying there's a 32% chance on a probability wise, there's a 32% chance that the stock is going to get to $165. So the strike price of 165 is saying there's a 32% chance of doing that. If we flip that around, it means there's a almost 70% chance, 68% chance that it's not going to get there. So if there's a 70%, 68% chance that it's not going to get there, and I sell the call right here, but the stock has a 70% chance that it's not going to get to 165, then that means that I can take advantage of the time decay. And as this option contract at 530 gets cheaper and cheaper and cheaper, I sold it at 535, but it gets cheaper because the chart kind of starts to move down here and wiggle around and everything, and that call loses value. Well, now I'm taking advantage of that, and I can buy it back at a cheaper price, and I can actually profit off of that. So how do we actually, take advantage? We're going to go on the sell side of the option contract at 165 because it's the 30 delta. We're going to right click and we're going to go to sell vertical, and it's going to bring something up up the vertical spread trade for us. In a vertical spread trade, I'm going to change it to 170, so it's 5 wide. It's a little more credit. And so we see here, I'm selling the August 11th 165, and I'm going to buy back the 170. So if I sell the 165 down here at 465, and then I buy the 170 at 360, the difference between those, because 170 is farther out, it's going to be cheaper. I'm actually getting credited $1.15. I'm getting the difference between the two. So I will get a credit into my account at $1.15. Now, if I times that by 3, then it's going to be 3 times 110. So $330 is what I would get credited into my account. Now, let's analyze this a little further. Pay attention, because I'm going to show you something really great with Thinkorswim. I'm going to right-click this area, right-click here, Analyze Trade. So here, it's going to bring in, you're like, whoa, what is this screen? It's super simple once you understand it. The blue line is showing me at expiry profit or loss. So if you look down here, and let me click this off because I had some other stuff set up. So if I go here and I just have this, if the stock ends up coming all the way up to say 175, I'm going to lose, look over here, 1,095. That's the most I can lose on the stock. Now, I wouldn't let that go all the way, but that's what you could lose if you just let it expire. Over here, we're going to see I could actually profit $420 as long as the stock stays below 166.47. I'm not going to lose anything. The red line is showing you that $0 mark. And as long as the stock stays below 164.78, I'm going to make the entire, right now, 465. The purple line is showing me real-time profit and loss. So say I sold this right now and the stock drops all the way to 137, I'm going to be up $200. If it flies all the way up to 160, I'll be down $250. So it's just giving you a good idea of, you know, profit and loss and stuff. One's permanent, one's real-time and moving around. And what's cool is when I draw this yellow line, it's actually showing me it's a 74% chance as long as the stock stays down here. I'm gonna, whoa, I had a big change there. Wow, did the stock just crash? Oh, that's interesting. I don't know what's going on there, but oh, there you go, it's back. So as long as I stay below here, right, this portion, I have essentially a 75% chance of success. There's a 25% chance it could still keep ripping. Now, I wouldn't say hard, like absolute, you know, 75%, that's it, you know, because obviously if the stock comes all the way up here today, this is going to completely change. But it does give you a really good idea of if you have probabilities on your side or not, okay? It's really fluctuating. The gray bar is showing me the expected move within the stock. So they're expecting about 121 to 176. That's going to show me one standard deviation, kind of just like how the stock would move in a normal basis. So essentially, I'm going to try to sell calls up here, and then I want to look, okay, at 166, do I think the chart could get so extended beyond 166? What do I think is going to happen? And I can kind of come in here and draw some lines and be like, okay, at 166, that's pretty far. I have a lot of room here. Even if it goes on another run, I might still be okay. And then what I'm really hoping for is this is just overextended, and today it kind of continues to drop, and as it drops down here, I can actually take advantage, and even if I get 50% of the move, maybe 60, 75% of the move, I can take it off and I can move on and take the capital somewhere else. So just to finish off the video, because I'm kind of showing you everything here and I want you to fully understand, when I'm taking advantage of this, you can also play around with the dates and stuff. So I could look, okay, what about if I go to July 28th? What if I go July 7th, a lot sooner? I'll get an 80-cent credit. What if I bring the numbers down so that I'm getting closer to the stock? Do I have that much room? So these are things that you kind of want to analyze on your own and kind of think what makes the most sense for me based on probability wise. I want to kind of keep it high at 70-75% probability, but I also want to make some money instead of just, oh, I'm going to make 30 cents on this or something like that. So there's a fine balance between that, but that's for you to decide. And then final last thing, I'm just going to show you, right click here, and I like to go create duplicate order, whichever one you actually decide you want to go do, because then it's going to keep your original play in there, so you can look at it later and you can kind of see how it's playing out. And you're just going to play around with the price, make sure everything's okay, and you're just going to click confirm and send. and then you're going to sell those options, sell one option, buy the other, and you're going to get a credit in your account, and then you can analyze from there and see what makes the most sense. And hopefully it's just kind of set it and forget it. The stock kind of moves its way down here like it is right now. You can see on the 15-minute it's moving its way down, and it kind of just breaks down here slowly, and you just take advantage of that theta decay. So I'm making money on the way up with this nice volume thrust like this. Now I'm going to try to make money on the way down with the time decay and the fall down. And then honestly, because I kind of think Generac is going to be a good long-term hold, once we kind of get down into this area, I might put a lot more money into something that's more a permanent account, a more long-term account, and ride this all the way back up to hopefully getting to the 200, 300 level, and then who knows, maybe all the way back up to these highs, but that would be a more long-term hold. So hopefully this gave you a great idea of kind of how to look at stocks, how to pay attention, how to take advantage of time decay, selling vertical spreads. A whole bunch of information packed into this video. I hope you enjoyed it. Like and subscribe if you don't mind and you found some value. And I'll catch you on the next one.